Shopify was in the spotlight today, folks, and not exactly for the reasons it might have hoped. The e-commerce giant saw its shares take a steep dive, plunging nearly 20% at points, and here's why. Despite posting first quarter earnings that beat expectations with a 23% revenue jump to $1.86 billion, it was Shopify's forward outlook that had investors hitting the sell button. The company forecasted a slowdown in revenue growth for the current quarter, projecting an increase in the high teens or low to mid 20% range, excluding factors like the sale of its Deliver logistics business. This outlook fell short of what some analysts were expecting and raised a few eyebrows considering Shopify's premium valuation in the market. For a stock trading at a lofty price-to-sales ratio of around 14, even small signs of slowdown can cause big reactions, as we saw today. On top of the revenue outlook, Shopify also warned of a slight decline in its gross margin by about 50 basis points sequentially. That's another factor that likely contributed to today's sell-off. Moreover, Shopify's bottom line revealed a net loss of $273 million, a sharp contrast to the profit seen in the same period last year. This shift into the red has certainly given both analysts and investors pause, reflecting the challenges Shopify is facing in an uncertain economic climate and a post-pandemic market adjustment. It wasn't all gloom, though. Shopify's gross merchandise volume and gross payment volume showed significant improvements, indicating rising platform engagement. However, the promise of these metrics couldn't outweigh concerns around the company's short-term growth prospects and rising operational costs. Shopify's aggressive moves, including a workforce reduction of 20% last May and offloading its logistics business, underline a strategic shift towards stabilizing and streamlining its operations. President Harley Finkelstein remarked on aiming to build a 100-year company, emphasizing long-term strategy over short-term gains. This narrative around Shopify today presents a mixed bag. On one hand, solid growth and performance metrics. On the other, cautious forecasts and operational challenges. The company's journey from pandemic darling to navigating a more normal, competitive landscape has been closely watched, and today's market reaction further highlights the tightrope Shopify is walking. So what do you think about Shopify's position and its future prospects? Are these just growing pains as the company adjusts to a post-pandemic economy, or are there deeper issues at play? Drop your thoughts, predictions, and analyses in the comments below. Let's get the conversation going on what's next for Shopify and whether today's market response is a bump in the road or a sign of more significant challenges ahead. Thanks for watching to the end. Remember, this is just one story from our full daily show, which includes all the other news and an analysis of the day's tech market activity. If you found this video interesting or insightful, then please like, subscribe, and share it with others. Your support is greatly appreciated. Catch you later.